My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just entertain, but to put this whole craziness into some sort of rational world. So call me 1-800-743-CBC or tweet me at Jim Cramer. Look, another good day. Another day where we heard endless complaints about how this market is too narrow to be trusted. You heard them, I heard them. Even as the Dow gained another 190 points, S&P climbed 0.93%. The Nasdaq jumped an astonishing 1.53%. So many otherwise intelligent people keep wringing their hands about how bad the market's breadth is. They say it's too narrow, limited to just a few large tech companies. I said they haven't done their homework. Maybe they just see that only about 10% of the S&P 500 has hit a new high in June, or just over 20%, maybe if you include May, and they think that's way too cloistered to be any good. It's a darn good start to me, at least to a longer-term move higher. Or when they chide the market, they go with the obvious criticism. 75% of the gains for the S&P come from only 10 stocks. The Magnificent Seven: Alphabet, Apple, Amazon, Microsoft, Nvidia, Tesla, plus Broadcom, AMD, and Salesforce, which we're going to hear from later in the show. I heard catcalls all day today. I'm not kidding. All day. That this market can't be real if tech's leading the way. Real. Somehow that means this whole move is sleight of hand? Legitimate? Plus, there are other tech stocks in the mix on the new high list. Apple ServiceNow, they have thousands of customers from every single industry. Hard to be broader than that customer base. Isn't that important? Hey, how about Oracle, which reported a terrific quarter this very evening with great cloud revenues? I'll take the 12 points you made in that one. Maybe you don't want them. I'll take them. Maybe you don't want the 20 points you would have made in Adobe. Oh, I like that one. Hit a 52-week high. Wow, I guess that's not allowed. Two semiconductor capital equipment makers, KLA, Tencor, Applied Materials, they joined the new high list, as did On Semi. One of these are all stocks that we've favored. You know that. Makes industrial chips. Fortinet for cybersecurity. They're all been on the show. We like them. Tech's a bigger and broader sector. There's nothing narrow about the winners in tech. And if you own them, which is what matters, right? Isn't that what we're doing here? There is no asterisk that says, bought in a narrow tech-driven market. But my bigger point is, despite endless qualms about narrowness, there are indeed plenty of non-tech stocks that are roaring here. I want to start with home building, okay? Because that's a pretty good place. I mean, think about it. The industry only makes about 10% of the economy, right? I bet it punches above its weight. I see Lennar, D.R. Horton, Pulte, all three of these large home builders, they're making new highs. To me, that's phenomenal. Especially when you consider that the home builders are supposed to be struggling after all these rate hikes. And maybe the naysayers are waiting for every home builder to be on the party. I mean, how can you ignore Lennar, Horton, Pulte when you make a judgment of a tape led only by tech? You're an ostrich if you do that. Look, part and parcel with the home builders is road building. And you know I like the road builders. They come on the show, too. I mean, you got Vulcan Materials, Martin Marietta Materials. Those guys are smart. What else do you need to see on the new high list before you pull the trigger? You got to see, like, a maker of macadam? You know, this is just crazy. Those are category-defining companies, and they give us tremendous breadth by their clients alone. Okay, they're not huge companies, but they aren't small either. Are we just not counting anything with a market capitalization below $500 billion? I hear lots of moaning that there aren't any industrials breaking out. Okay, I'm going to counter with Boeing. That's an industrial. General Electric, industrial. Howmet, okay, too small for you. Each of those are in aerospace. Here's a gigantic industry that is on fire. And there are literally hundreds of thousands of suppliers in the aerospace business. I think you can presume that there'll be many more 52-week highs coming from this industry. They can't all happen at once. You can wait for the rest of them to join the new high list, or you can try to make money right now in the others that will likely follow companies like a Boeing or a GE. There are industrials that touch on so many areas: digitization, climate control, electrification, onshoring, and they're breaking out all over the place. The best example of this one is a company called Eaton, which is at the cusp of all these trends. If you want to wait for, say, Emerson, which is a charitable trust name, to get on the list before you pull the trigger, okay, be my guest. I don't care. But as I plan on telling people at our investing club meeting on Wednesday, you can't be too early in this tape when it comes to long-term secular winners like an Eaton or maybe, hopefully, an Emerson if they get their act together. Then there's Ingersoll Rand. They represent the basic machinery world. W.W. Grainger, you see, they're playing motors, pumps, heating, ventilation, power tools. Seems pretty broad to me. PACCAR's doing well as part of the transportation cohort. But maybe the naysayers say you shouldn't qualify a light truck maker. It doesn't work. It's not an industrial. I don't know. It's so frustrating for me. Here's the one. Look, you watch TV, right? You watch these shows. What is the worst industry in the country? Commercial real estate, right? I mean, come on. And then what the heck is Otis Worldwide doing on the new high list? They make elevators for commercial real estate, for heaven's sake. But that's precisely what I'm talking about when I see the broadening out. Sure, maybe it's just because CEO Judy Marks is incredibly good at what she does, which she is. She's taken Otis to a level could never have been when it was buried inside of United Technologies. But if you want a leading indicator that's all substance and zero hype, Otis Worldwide. Cintas is on the list. Okay, hey, big shots. You know what that is? Uniforms for the small, medium-sized businesses across the country. Tough to get broader than that, right? Not that those thumb-sucking theoretician idiots know what a Cintas is. Hey, what's a Cintas? Google Cintas. Will you over there? Google it. Lots of people seem to think that the consumer's dead. You hear that endlessly, right? Darden's on the new high list. I mean, that's Olive Garden. You've probably gone there. They have a really good rolls and a kind of endless salad bowl. To me, that says a great deal about the market. It's broadening out. Look, you want to wait for McDonald's, right? That's what you're waiting. You're waiting for restaurant brands. So you don't want to do it until you see Wendy's. It doesn't work like that, people. Is there anything more discretionary than a cruise? Weird Al, Carnival, Norwegian, and Royal Caribbean are all breaking out right now. But maybe people really are long on money and short on time. No doubt some post-COVID revenge vacations, too. How about a beer with that vacation? How about a beer with that diversification? Molson Coors is on the list. I mean, you can't get Molson Coors on the high list without people spending money when they are out bringing home a six-pack to watch a game. This is what matters. Tesla does not control that, okay? It's not like you can't buy it because Apple's on the new high list. If you have to wait for Walmart to go up another 54 cents and you get on the new high list, so be it. I'm sure there'll be people who pronounce the market better when Walmart goes up. I want to get in before Walmart. That's what I want to do before. Just because it's in striking distance, I say, well, wait. I know we should have had something that represents the auto industry besides Tesla, which is invincible at this point, 12 straight up days. Okay, how about Snap-on? They make the tool company that makes the best equipment to diagnose and fix vehicles. That's more representative than most, although we do seem to forget that Tesla is indeed an auto company, not a FANG. We have fintech like Fair Isaac, the owner of your FICO score. So people must be borrowing, at least checking their credit. How about Moody's? People must be issuing bonds. At least companies do. How about healthcare? We got Dexcom for diabetes, Intuitive Surgical for robot-powered surgery, Cardinal, and AmerisourceBergen for drug distribution. These are signs that there's more pharma being used. Biogen's got a story, but if you go beyond the SP 500, you see dozens of smaller junior Biogens being bought by big-cap pharma. Oh, and how about a conglomerate that includes, let's say, a railroad, multiple insurance companies, candy company, huge stakes in American Express, Coca-Cola, Apple, hosts of oil and gas outfits? Yeah, how about Berkshire Hathaway? The ultimate diversification. Does that not count? Does it not count that they made the new high list on Friday? I mean, to me, it means something. Look, I went into this really in great detail for one reason. Sure, most of the gains in this market are indeed in aggregate concentrated in a handful of huge tech companies. But that's simply because those companies are so large, big market cap. Their aggregated strength is masking all the positives that I'm talking about. This is what we trade. This is what we own. Tech is a leadership group, of course, but I worry you may miss some tremendous opportunities in this market because you're being told endlessly that concentration is bad, nothing else works, until it starts working. And then those people who won't ever acknowledge that they said, oh, you can't be in there because nothing else works. Once it starts working, they're gone. They'll never apologize to you. So remember, when you look underneath, this market's not all that concentrated. We got tons of winners outside tech, which means it might be healthier than you think, okay? Even though we can still go down if you get some tough data tomorrow or if the Fed says something bad. I am not saying you don't sell anything. I never want you to be greedy. I am saying that if you've been scared into being largely in cash because of all these theoreticians who come on air, maybe you buy the dip. Here's the bottom line. The strength away from tech is now undeniable. It's time to open our eyes to what's really happening rather than being blinded by the big cap tech light. Let's go to Robert in Georgia, please. Robert.
Yes, Jim. Thank you for taking my call.
You're welcome.
And thank you so much for your guide to investing. It's really set me up for investing my IRAs at home.
That's what I
my
want.
question today
You've
is
got horse
regarding
sense.
Moderna. I bought it at 150, or I bought into it at 156. It's now trading around 121, 122, and I know it's got a lot of lawsuits. Is it time to flush it?
No. Look, it's down 31%
it?
for the year. We have had Stefan Bancel on. I think the man has developed an incredible vaccine template that we're going to all be using someday. You do not sell that stock. I think you can even buy more Moderna. I believe in Bancel that much. How about Kathy in Indiana? Kathy.
Booyah, Jim.
Booyah,
I'm a
Kathy.
first-time caller.
All right.
And so I appreciate you sharing your knowledge. My question is, what's going on with Dollar General? It drops so low.
Okay,
so
I got to tell you, Kathy.
Sorry.
When you go through that conference call, that was one of the worst conference calls I have ever heard. That company has lost its way. I want to go to my Dollar General right near my place in Pennsylvania and wring somebody's neck. And more of the fact that the guy behind the counter is terrific. It ain't his fault. It's management. I know everyone wants to focus on the so-called narrow leadership of this market and how this market is therefore not any good. They know nothing. Harping on that will only blind you to all the other names that have been moving higher. And then some, man, tonight. We're not wasting your time. I'm talking to the head of a company that is taking food waste and turning it into sustainable products and renewable energy. Don't miss my Susan with darling ingredients. Now, I'm a little fired up, sorry. Then Salesforce held its AI Day and then New York City Day, and we were on the ground to learn all the latest developments with the cloud kingpin. And what's it going to take to get MP Materials back on track short term? I'm not sure. Let's get to the heart of the rare earth materials company with the CEO and find out. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.